The first thing we're going to talk about is the COSO framework. To understand the importance of the internal control, we will walk through the COSO framework, which is from the Committee of Sponsoring Organizations of the Treadway Commission. We will look at a couple key areas to apply that to after we look at the framework. So just a little bit of history on the COSO framework. COSO is a joint initiative of 5 private sector organizations, including the American Institute of Certified Public Accountants and the Institute of Internal Auditors. So some heavy hitters coming up with this framework, people that are knowledgeable about the subject. It was established in 1992 and last updated in 2013, and is the leading framework for designing, implementing, conducting, and assessing the effectiveness of internal controls. So kind of just a little bit more information about the framework. It's a method to apply internal controls regardless of the entity. So whether you're a for-profit, nonprofit, governmental, whether you're large or small size entity, this framework can be easily adapted to meet your needs and your situations to design effective internal controls around. So, and that's because it's a principles-based approach. So the framework establishes the design of how the internal control structure should flow, not really the specifics of those controls. That's really meant to be specific to your organization. Requirements for an effective system of internal controls, opportunities to gain efficiencies. Oftentimes when we talk to clients about trying to implement new or enhanced internal controls into their current structure, the first thing they think about is, oh, that's going to take away time and energy that I'm already limited on. But really, the idea of having effective internal controls is to really gain efficiency. So it might take a little bit more time up front, but you should see time savings on the back end of that as you have less errors and things that you have to track down, and those errors don't build on each other. So they're being detected on a timely basis. So the error or the weakness within that internal control can be fixed up front, and the problems that generate from that don't grow over time. So always think that it's going to be a gain in efficiencies rather than a time sucker. So really, I wanted to start too with the definition of internal control. So it's a process effected by the entity's board of directors, management, and other personnel designed to provide reasonable assurance. So really the idea here is you're never going to get absolute assurance from your system of internal control. There's always going to be an element of risk. The idea is to mitigate that risk and lower it to an acceptable level. So pictured in the slide is the COSO framework cube that you've probably seen at some point within your career. We're going to first take a look at the top section of the cube, which are the 3 objectives of the COSO framework. So the first objective is the operations objective. So here we're looking at operational and financial performance goals. So if you think about, you probably heard the terms key performance indicators or KPI, other kind of information like a dashboard that will help you monitor activity on a regular basis. So those are designed around your most significant results of your organization to achieving your objectives. So that's the whole idea of what those performance goals are talking about. And then safeguarding assets against loss. As an auditor, we're often focused in our processes of managing risk, and that includes making sure that there's no theft or misuse of physical assets. Then we'll go on to the reporting objective. The reporting, first one is internal and external reporting. And here, just want to kind of pause and say, a lot of times we focus a lot on the internal aspects of that, but there are oftentimes significant external reporting requirements that we have to factor into our systems of internal control, such as grants or single audit compliance, if you fall into that arena. So that has to be part of your analysis, risk assessment, control procedures. And then financial and non-financial information. So if you think about what are examples of the non-financial, things like utility reporting requirements. So oftentimes, if you have a water authority, you have to have daily water testing, and there's stringent reporting requirements of that. And if they aren't met, there could be significant fines and penalties related to that. So a strong system of control is going to take into consideration the controls around those reporting requirements as well, and making sure that they are adequately handled and sufficient to reduce your risk. And then the last section on this slide, the compliance objectives, adherence to laws and regulations. We kind of said about the grants and single audits, but also you'll have municipal code. So whether it's a township, borough code, school district code, whatever municipal authority code that you would have to follow, you want to make sure that the requirements within that are significant to your organization are handled and understood within your system of internal control, and that there's proper monitoring of that they happen on a regular basis. So, another example of that would be, liquid fuels requirements. A lot of, your townships, boroughs will have stringent requirements, and I'm sure people that deal with that are very familiar with those, but, making sure that those are adequately covered within your control system to make sure that there's no issues there. So next, we're going to take a look at the front side of the cube and the 5 components of internal control. So control environment, really, even though the internal controls are different than processes, just wanted to take a step back here and just say that oftentimes there can be crossover between your procedures and controls. An example is, if you have a grant that you're setting up a separate chart of accounts to track that grant money, part of your process would be to record those transactions to those grant accounts. But that also aids within your internal control structure, as well as, those monies are oftentimes required to be segregated from other funds, and that helps aid with that. And then different reporting can be processed out of your systems in order to then, monitor that grant activity, make sure that funds are being spent down at the proper rates and in compliance with your grant documents. So just kind of wanted to step back there and just kind of go a little bit deeper with processes versus controls and how sometimes they can cross over. Really important is the tone at the top of your organization. If there's no tone at the top, if there's no consequences for circumventing controls or not following the proper procedures, you can't have an effective system of internal control. So that tone at the top is very important, and we'll kind of talk about that a couple times throughout the presentation. So assigning of authorities and responsibilities, we often talk about segregation of duties when we talk about internal controls. That's key. Not everybody can obtain that because of limited staff, but I just kind of want to take a break and define what that really means. And that's really segregating the control over the physical asset, whether that's cash and its processing cash receipts and disbursements over the recording of that asset. So recording into the general ledger and maintaining a aged accounts receivable, accounts payable, things of that nature, writing checks. So just to kind of understand what that concept is and going forward, trying where you can to obtain that segregation of duties is one of the best ways to improve your internal control structure. Attracting, developing, retaining, and training competent staff. So hiring controls are important, such as checking references and running background checks, because some people have committed fraud already and have criminal records. And that's, again, going back to the tone at the top, why it's important to have a good tone at the top, because if the previous employer where they committed fraud didn't take the proper procedures and report that, then when you run a background check, that kind of thing is not going to show up, and then you'd hire that person and that cycle continues within your organization. So you want to break that cycle, make sure you have a tone at the top, make sure you're following the right procedures there. So the next area is risk management. So the risk assessment process should be done on a regular basis, and when any significant changes happen to the control environment, such as a change in key staff or in activities or environment. So in this environment, a lot of people are working differently remotely. So you kind of have to step back and say, well, how's that affect what our key controls within our organization are? Does anything have to change based upon where people are sitting nowadays? They're sitting at home, how things are processed, what are key controls that are looking different? Are they still effective the way they're operating currently, or do they need to be revised, or we need additional monitoring around those activities? So the control activities, they should be designed to specifically address and limit the risk identified. So again, we're always going to have some element of risk, but you want to design them to mitigate that risk to a low level. And you always have to consider the extent, the cost versus benefit. So you're not going to spend thousands of dollars to monitor an account that only has, $2,000 of activity within it each year. So, there's always a cost benefit analysis and trying to figure out what's appropriate within your risk assessment and why you're designing those control activities. So your control activities need to be performed across businesses, processes, and technology. So kind of just touch on the technology piece here a little bit too. So the more your systems are dependent on technology, the greater you need to build those strong controls over that technology. And I know we're going to talk a little bit, have a session today about remote technology and how that's looking within our environments and what controls we need to have over that as well. So probably a lot of us will need to pay attention to that as our systems are being more remote these days. So really, along with that, having strong passwords, requiring them to be changed frequently, and then backup procedures and having a level of technology training and phishing schemes. It's important to know, not only with phishing schemes, but with any schemes out there, what the current environment looks like, because you're going to have to address to see whether your current system of controls are currently set up to prevent those types of schemes. And that's important, just to be informed about what you're seeing in the current environment, because that changes daily. The criminals are smart, they're constantly adapting. Talk a little bit about information and communication. So making sure that the information in the organization that you're using to make your key decision is accurate is key. You want to make sure that, there's some level of comfort or some process to verify that information is accurate, especially as the decisions that you're making are contingent on that data. So the more contingent, that data becomes, the more accurate you need to make sure that that data is before making those decisions. So, and part of that, is communicating throughout your organization. So a lot of times we're dependent on other departments within our organization to make sure that information that we need is being reported timely. So making sure that everybody within the organization has a clear understanding of what the deadlines are, what the information needs to look like, what the controls around that information need to be in order to ensure that the information is accurate. The last section is the monitoring activities. So monitoring is the last, but it's very important. And it's really the check to make sure that the controls are functioning correctly. So you kind of have various types of monitoring activities at different times. So ongoing versus periodic. So some examples of that would be a daily process might be double checking the cash drawer at the end of the day, or a weekly control might be reviewing cash disbursements. A monthly control might be reviewing the bank reconciliation, or a quarterly control would be reviewing of payroll tax returns. So depending on what that control is that you're doing and how often it occurs will lead to how frequently it needs to occur. And that could be very different from organization to organization. And then, really the evaluating findings versus internal and external benchmarks. So, we talk about internal benchmarks. We're talking about, your dashboards, your matrix, your budgets, or even, when we're looking at that for the external piece, we could be talking about verification with the bank. So if you have online bank access and you're reviewing the bank reconciliation process, hopping onto the online access and making sure that the bank balance that's live on the website agrees to what's on the reconciliation. So that's external verification, but you can also do that with vendors or customers as necessary. So I just wanted to briefly say with this slide, just put this into the presentation kind of more as a tool when you're going to develop internal controls that you can go back and use as a reference point. So it's a good summary of what was kind of on the previous slides, all kind of condensed into a nice little table here, and could be useful as you're trying to evaluate whether you feel that each area is covered within your control structure. So the last side of the cube, we're not going to spend a lot of time on the last side, but just kind of wanted to highlight that, you really have to consider within your organization whether different divisions or operating units should have different looking controls within them. So you could have very different controls over cash receipts for your utility billing versus what you'd have for permits or real estate taxes. And oftentimes the people handling those transactions are going to be very different within your organization as well. Sometimes they're the same, but that can drive, really building different sets of internal controls around those specific activities, even though they all fall within the revenue cycle. So just kind of in summary over the COSO framework, it's key that the sufficient controls exist within each area of the 5 elements, and even within, the divisions and throughout the cube model that we saw, because really any one of those that's really failing can really result in having a deficient system of internal controls. So you want to make sure each of those areas is adequately addressed within your system of controls. And again, your goal is to have reasonable assurance, not absolute assurance, because you're going to have things like human error and judgment, and controls can be circumvented. There's never going to be an instance where you're going to have an absolute assurance over your systems. So we're going to take a look at some of the areas of conducting internal controls that you should have be considering within your entities, and we're just going to look at a couple focus areas. The first being cash receipts. So the first area is making sure you have the proper rates being used within your invoicing system. So really maintaining rate schedules and having a specific procedure around how those rates are updated. Oftentimes that's done through a board vote resolution, but making sure that process is documented and followed. Review usage reports for unusual activity. Oftentimes a system will generate a report on its own, but if your system doesn't generate that, taking a quick scan through the billing summary before it's run and mailed can prevent a lot of headaches on the back end. You spend a lot less time fixing a problem before the bill goes out to a customer than having to spend 10 minutes on the phone with the customer, then investigating and then going back to fix it. It just builds the time, energy, and that's where having the system of internal controls is going to be a time saver and efficiency gain within your organization. Some other areas, recalculate invoices for proper billing, review cash receipts logs, and agree to deposit slips and bank statements. And again, some of these things that we're reviewing can be done on a spot check basis. So really not every single transaction, every single invoice needs to be looked at, but just having the possibility of something being picked for a review and knowing someone's reviewing things on a somewhat regular basis is often enough to deter any impropriety within that system. So just keep that in mind. Another area that a lot of frauds or misappropriations can happen within are adjustments to customer accounts. So it's good to have a system in place to review those adjustments and make sure that they are proper, they're properly authorized, they're necessary. There's nothing going on with those adjustments. And then, reviewing the budget to actual and other expectations on a monthly basis. So the next area is the cash disbursements. The first thing we want to cover is really reviewing of the invoices and making sure that the information looks correct that you're reviewing. Oftentimes fraud can happen with manipulation of invoices or creating fake invoices, and what you want to look out for is missing information such as addresses, phone numbers, variations of real vendor names. Formatting of the invoice is very different from what a standard invoice from that vendor would look like. So it's important to kind of be familiar with that, and reviewing things on a regular basis should gain you that familiarity with how it should look, and then help you spot things that are irregular to follow up on. So again, questioning unusual, unknown vendors, payee and amount equal the invoice, just kind of double checking information. Look for alterations, quantity and pricing for reasonableness. If you put something out for bid, making sure that the pricing that's used, it agrees to what the quotes within the bidding were. Make sure information foots and cross foots, there's proper approvals, verifying budget and regulations are followed. You know, with the budget, it's very important to try to make your budgets as realistically as possible to make sure that you can use it as a monitoring tool. Some people will inflate their budget expenses, you know, in fear of, well, we don't want to go over budget, so we're just going to throw extra money in these categories to ensure that we're not going over budget. Well, in doing that, you take away, lessen or eliminate the control around that tool as a monitoring activity. So just be careful there. Just try to make things as realistic as possible so that it can be used as part of your internal control. So the last area before we jump into bank reconciliations is our payroll focus, having a timesheets and making sure a knowledgeable person's reviewing them, someone that knows the hours that people work and whether or not PTO, sick time is appropriate. Verifying pay rates, oftentimes within an organization, you're only increasing those pay rates once a year. In that case, you know, doing a spot check and making sure that the processes and controls are followed and that they're adequately updated at that pay increase. Overtime and special rates, if you're, you know, in a David Bacon Act, you know, where you're going to have different rates needing to be applied, having someone that's knowledgeable about that and able to review that and make sure that there's adequate controls. Withholdings for employee taxes and benefits are appropriate, and then payroll returns are properly completed and filed, and payroll taxes have been properly and timely remitted. So I did run into one fraud case within my career. I think it was a municipality that didn't have an audit, but what was happening is their payroll clerk was remitting payroll taxes for their husband's business through the municipality. So, you know, just being, you know, cognizant that things like that can happen and having expectations built, you know, and knowing what it should be on a regular basis and when it falls without outside of that scope, that you can go back through and review that. So I just wanted to take a couple minutes real quickly here, as my time's almost up, to go through the bank reconciliation process. Oftentimes we're asking board members and whomever to review this, but if they're not familiar with what can go wrong within the bank reconciliation, it's often hard for them to really do an adequate job of reviewing it. So really, we want to agree the bank statement balance on the reconciliation back to the bank statement itself, or online access like we discussed earlier. Review deposits in transit for reasonableness. They should be within a day or two. You know, if they're outside that range, you might want to investigate. They shouldn't be, you know, a week or a month or however long. They should be a day or two. Reviewing outstanding checks for unusual items or long outstanding items. Again, that could mean that there was an error or something going on, a duplicate payment that might need to be investigated or corrected. Review unusual adjustments, agree the book balance to the trial balance. A lot of systems will reconcile within the system, but not all of them will make sure that the ending book balance reconciles back to the trial balance. So you just want to double check that in the process. review the checks clearing the bank for unknown or unusual items, and review transfers from bank accounts are appropriate. So one of the biggest frauds was the Dixon, Illinois fraud. And what happened there was they were transferring monies into a fake reserve account that wasn't even on Dixon, Illinois books. And then the bookkeeper or controller was taking money out of that account. So no one was reviewing that account, but knowing where those transfers are going and making sure that those accounts are included in your review process as well. So this is just a sample bank reconciliation. Just want to take a quick look down through it. Just if you're unfamiliar with the formatting, each bank reconciliation is going to be formatted a little bit differently, but it's going to have the same basic elements. So the first line item is your bank balance, and that should be tied to your actual bank statement or online balance. And then your deposit in transit amount. Again, you can see this is a May 31st bank reconciliation. That's as of May 31st. It's within a day or two. We're good there. The outstanding check list usually has a little bit more detail with vendor name, date, and check number. But here you can see all these check numbers are relatively close together. The dollar amounts are relatively low. There's nothing really that's jumping out here that's of concern. And then you come down to your book balance as well.